Well, howdy there, Internet people. It's Belle again. So today, we're going to talk about the Fed saving the U.S. from Trump's economic policies. We've had some public comments come out from Federal Reserve officials, and they're definitely worth acknowledging because they provide the clearest picture yet of what those way up in the economy see happening. The comments coming from people who normally don't make a lot of public statements are an indication that there might be a desire to try to calm anxieties as more and more nervousness starts becoming apparent in the U.S. economy. To provide a quick snapshot of those feelings, we'll look at the University of Michigan's closely watched survey on consumer confidence. Inflation expectations hit their highest levels since 1981. Inflation expectations for 1 year out hit 6.7%, and expectations for 5 years out hit 4.4%. 6.7 is the highest since 1981, and 4.4% is the highest 5-year window reading since 1991. Consumers now expect Trump's policies to mess things up beyond his term in office. The current economic conditions index fell 11.4%, and expectations fell 10.3% to 47.2. That's the lowest since 1980. The survey also showed unemployment fears rising to their highest level since 2009. Pretty much all bad news. Now on to the statements. Boston Fed President Susan Collins said the Federal Reserve would, quote, absolutely be prepared to intervene in the market. In another interview, she said, quote, the higher the tariffs are, the more the potential slowdown in growth. She also noted the likelihood of elevated inflation, but on the upside, said she didn't expect significant economic downturn. Significant is the key word there. At a separate event, New York Fed President John Williams said he expected Trump's policies to increase inflation to 3.5 to 4%. In still another set of public comments, the St. Louis Fed President Alberto Muslim said, quote, continued vigilance was needed, and added, quote, I would be weary of assuming the impact of high tariffs on inflation would be only brief or limited. Finally, Kansas City Fed President Jeffrey Schmidt said the Fed would prioritize controlling inflation over worrying about jobs and brought up the inflationary spirals of the 70s. That's a clear indication that they're worried about an increasing unemployment rate, and it sounds callous to say they'll prioritize inflation. But it makes sense. If inflation goes up, interest rates need to go up, which means borrowing money is more expensive, which means it's harder to expand a business. If interest rates go up, building factories in the U.S. will get really expensive, if that's even something Trump is still trying to do at this point. In short, ranking officials of the Federal Reserve are publicly giving people insight into their thinking. This is probably happening to calm everybody. If you want to know where we're at, the above comments are supposed to be calming. Calming investors is important right now because the markets care about your emotions. Anyway, it's just a thought. Y'all have a good day.